This is Alan Bush with ADMIS. Seeing stock index futures trading higher this morning. This linked to an apparent better situation in the Eurozone. There's more talk that Spain may soon announce their need for a bailout. At least they may formally request one. This is seen as a bullish influence in as far as it could alleviate some of the strains within the Eurozone. Our feeling is that this will probably be the beginning of more bailouts from not just Spain but from other countries in the Eurozone. Most likely we will see these gains given back today in stock index futures. In fact, I think we can see futures trading lower on the day as traders start to look ahead toward next week's earnings results that are unofficially scheduled to start next Tuesday. Also, it is widely expected that quarterly earnings will probably show a quarter-to-quarter decline in growth. This is likely to be the weakest earnings season as far as growth in the last 3 years. So from here, even though we are a bit better in stock index futures, I think we can trade lower on the day. Over in the currencies, as we mentioned, a better tone to the euro situation, helping the euro currency to advance. Most likely these gains will not follow through since there are likely to be additional problems cropping up from time to time. So we're seeing the Australian dollar making a 4-week low against the US dollar after the Reserve Bank of Australia cutting interest rates by 25 basis points to 3 1/4. It's interesting to note that financial futures markets were widely predicting that there would be a cut in the Australian interest rate, while most analysts were expecting unchanged. So the fact that most analysts were basically looking for no change, most likely we will see the Canadian dollar continuing to gain on the Australian dollar, and there are some big gains in that spread today in favor of the Canadian dollar. Credit markets seeing futures trading a little bit lower as the Eurozone situation apparently getting a little bit better. However, the ongoing weakness in the global economy is likely to continue to support the credit markets. And I think we can see a move to higher on the day in treasuries. I think this move will probably continue well through the end of this year. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.